I think that was hard to do a few years ago, but to see people being able to bootstrap these businesses by having lifestyle changes, by having these side businesses, I think is really inspiring. And maybe a few years ago, they would have been looked down upon. Like investors would have said, well, you got to raise venture capital. You have to think bigger. You can't have this like side business. I think it's really being celebrated now, and that's exciting. I think we're saying like bootstrap businesses are great. I bootstrapped my first company. So I was working full time at JP Morgan and started this company in my living room. And we had built product, had customers and revenue while I was still working. And then, everyone said, I think you better quit your day job to focus on this. This is a real thing. So bootstrapping is back, and now the tools are even better. And I think that's really great.
Hello, and welcome to another episode of The Long Game. My guest today is Jenny Fielding, author, venture capitalist, entrepreneur, and teacher. Jenny has quite the experience in building companies, investing in companies, and also has gone around the world interviewing entrepreneurs looking for core traits that define who and what makes an entrepreneur, regardless of geography and background. I thoroughly enjoyed this conversation. We get into a lot around what to look for in entrepreneurs today. So if you are an entrepreneur, this is what investors are looking for and are investing in, and how things are shifting a little bit, but also not so much in the current landscape with the AI tools that we're having. But fundamentally, the core ideas of investing in an entrepreneur at the early stage also still stay the same. We talk about the venture capital markets in general. We talk about what the student population is looking for and looking at for entrepreneurship, and so much more. I hope you enjoyed this conversation, and if you do, pick up a copy of Jenny's book, and I'll catch you in the next one. Jenny, thanks for coming on the show.
Thanks for having me. Excited to be here.
So I was digging through some recent LinkedIn posts, and I saw you post something regarding the venture capital space and how right now VCs are sitting on the most amount of dry powder that they ever have sat on. So I know you were surprised by that. What's surprising about that, and why do you think it is?
Yeah. So I think, many people raised venture capital funds in 2020 and 2021. There was just this glut of capital kind of chasing maybe too few deals, and everything was getting funded. But now fast forward to 2025, I would imagine that a lot of those reserves have been depleted, right? You would think, okay, if you raised a fund in 2020, then you got to some kind of, harder times in 2022, there'd be a slower deployment pace, but like by 2025, you'd be out of that capital. We're talking like 5 years in. But according to PitchBook, there's still an incredible amount of cash out there. Now, a few things can be happening. I think, numbers don't always say, all of the detail. A lot of that is concentrated in some of the mega funds. So just, a few funds that have a huge amount of capital. So when I call my emerging manager funds, they're not sitting on piles of cash. Right. So I think that, sometimes you have to dig a little bit deeper. But still, growth capital has been hard to come by, but that is who's hoarding a lot of this cash. So it's really tough for entrepreneurs out there because they get these like mixed messages, right? There's so much cash out there, but why is it so hard for me to raise capital? So I think that's a little bit of what's going on.
Do you think venture changes with this world of AI where we're seeing, coming out of the 2020 and 2021 kind of years, it was austerity measures, right? It was pursue cash flow, get to some amount of revenue, maybe even to break even, control your own destiny. Everything's starting to get tighter in 22, 23, 24. And so the entrepreneurs have kind of shifted their mindset to focus on that. And then when you layer in AI, we're seeing a compression of how much money is needed to be able to build a product, to get to product market fit, to get to some level of revenue where you could control your own destiny. So do you think that this trend is going to continue where VCs are, maybe it's out of hesitancy not deploying capital, but maybe it's also out of companies are needing less and less to raise. And so they're kind of going this, not bootstrapped approach, but kind of a slower burn, a less raise, and kind of be able to do more with less.
Yeah, 100% yes. I think that, as you said, a few things happening. The austerity and we have to be super capital efficient has really kind of shored up the mentality of many entrepreneurs, which is great. And then that coupled with so many of the incredible tools and automations that you can access now as entrepreneurs. So I think that confluence of things is really bringing around a new landscape. As a venture capitalist, it doesn't bother me at all because I'm actually an entrepreneur at heart. I built 2 companies and I'm always rooting for the entrepreneurs. And so if you don't need us anymore, like, that's great. Like, I'll find other things to do.
A woman of the
Um,
people.
but I think that's, it's really exciting. So to give you an example, we have a portfolio company. They had bootstrapped an AI automation tool. I don't think that's a huge company, but they bootstrapped that while living in Bali. They wanted to live as cheaply as possible. So they moved to Bali. And that product generates about $30K a month. So it's just on autopilot. They spend, 10 minutes a day on it. And that gives them $30K a month. Now, they are pursuing what they really want to pursue, which is a much larger opportunity. And to do that, they didn't really need much money because this is just a cash cow. And they decided, to let some friends and family who knew them, and, we'd known those guys for a while. We put in a small check. They didn't really want to raise money. And, we're excited about this big vision. So I think that was hard to do a few years ago. But to see people being able to bootstrap these businesses by having lifestyle changes, by, having these side businesses, I think is really inspiring. And maybe a few years ago, they would have been looked down upon. Like, investors would have said, well, you got to raise venture capital. You have to think bigger. You can't have this like side business. I think it's really being celebrated now. And that's exciting. I think we're saying like bootstrap businesses are great. I bootstrapped my first company. So I was working full time at JP Morgan and started this company in my living room. And we had, built product, had customers and revenue while I was still working. And then, everyone said, I think you better quit your day job to focus on this. This is a real thing. So, bootstrapping is back and now the tools are even better. And I think that's really great.
I've always been a fan of kind of that dichotomy between bootstrapping of, starting your own thing, kind of like clawing out that revenue and getting to that control. You have full control if you don't raise external capital, and you can kind of grow organically, and maybe it's slower, but it's also maybe more aligned with the entrepreneur and the entrepreneur's goals, but at the offset of they're holding all the risk. Versus venture capitalist route, you're diversifying risk, you're bringing on capital from investors, and you can go faster. But there's that balance, right? Which is right for which type of business, what size is your total addressable market. So my question for you is, from a venture perspective, if you're investing in entrepreneurs that are bootstrapped, that maybe have more of a leaning towards lifestyle, if they can end up getting free flowing $1 million in cash, that's a really great business for someone just to own, but it's not necessarily a very good business for an investor to invest in if they're looking for a return on capital. So how do you and your partners kind of look at investing in bootstrap businesses with the idea of returning money to LPs?
Yeah, I mean, that's a great point. We have a model and we can't really amend our model because we raise money from these external limited partners. And so we need to invest in companies that will, return our fund and make money for our LPs. I think the thing is we need to shift this binary kind of outcome of like, we're bootstrapped or we're not. And I think what's really interesting about what's happening now and the guys that we invested in is like they want to raise money down the road. They just don't need to right now. And I think this idea, that really kind of came to a head in 2020, 2021, where everyone just thought, I have an idea, I'm going to go raise money. And I think we're now having this reset of like, okay, like you have an idea, like go use Cursor and get a prototype going. And there's all these like amazing tools to get it out there. But that doesn't mean that you want to be bootstrapped forever. And so I think that it was always very binary, and it was, oh, well, you have a bootstrap business. And so there was, that was derogatory. Well, it's a lifestyle business. I think that if you can get your business off the ground and find product market fit, which we've found sometimes can take 2 to 3 rounds of capital, right, before you really find product market fit. That can be $8 million, $10 million that you've raised in different tranches, and all of this. Well, maybe there's a better way to do it, right, where you control your own destiny and maybe you don't find product market fit and you haven't burned all that cash, right? And so there's obviously opportunity costs for the entrepreneur. But I like this reset where at different times in your business, you control the levers. And we're really seeing that with our founders. We have a few companies that have actually raised a significant amount. Now they've gotten to profitability, and they'll decide what the next step is, based on market, based on their own metrics. And I think that's, that's great. And, I don't think everything just goes up and to the right in company building. And maybe like that has to be rethought in terms of venture, that there'll be periods where these companies maybe are bootstrapped or they control their own destiny. And there'll be, periods where they need rocket fuel.
Love it. And I think anytime there's a binary choice or a perceived binary choice between two paths, I think that's not the most healthy in any type of ecosystem, entrepreneurship or otherwise. And so to fully kind of embrace and recognize that that's breaking down, there's a spectrum of bootstrapped and bootstrap plus capital and then maybe bootstrap and iterate to find product market fit while you're sitting on the cash and slowing your burn. And there's like many pathways to build a healthy company that solves problems for people. So I like that what the deal box is kind of opening up, widening, and changing while the technology and the people and the tools out there are also changing.
Yeah, I mean, in 2021, I got many calls from founders that were maybe like Series A, B, C, saying, these SoftBank guys are just offering me a ton of money. These Tiger guys, we don't actually need the money. What should I do? And it was really hard to advise them because, I hadn't seen, the other side of how this is going to play out. But I do know that in every single case, I said, you have to think about this carefully. Many of your investors are saying, just take the money and put it in the bank. And that might, have worked out for some. And, I think some were saying, be careful. This has strings and this could bring you down. So really like talking it out with founders during that time. But I got many, many calls, right? And so, my point is that you don't always need money along the journey. Sometimes your business is going really well. And during those times, there was so much cash that they had to deploy it. So they were just looking for places to deploy. And it wasn't just the two that I mentioned. I mean, where there was, dozens, hundreds of these, kind of growth stage VCs. And then it wasn't even VCs. It was the private equity guys and the hedge fund guys. And like everyone was getting into the game, right? But it wasn't necessarily healthy for the entrepreneur. So I think now, this reset is really entrepreneurs taking back the control and realizing like there's some stories of how that didn't work out. And so I'm going to be more careful and planful and really think through all these choices as opposed to like, oh, if someone wants to give me $50 million, $100 million, like I'm just going to take it and put it in my war chest and, kind of look at me. There was a little bit of maybe arrogance around that or just, naivete. And I think now there's just more information. And I think people are saying, yeah, if you don't need the money, don't take it. And don't be worried that it won't be there down the road. Because if you're building a real sustainable, quality, impactful business with longevity, cash will always be there.
Makes sense. It makes sense. And maybe it's easier, hindsight to say when someone's offering you tons of money, don't take it. But you are right. It's weird how the economics of a venture-backed business can be negatively impacted by raising too much money or at the wrong valuation. It just sets you up for really bad outcomes down the road if you don't, like you said, act planfully and really think about, do I need the money? What am I going to use the money for? What's the valuation? Who am I taking it from? What's my next round and my next round or my exit strategy look like? And what do I need to ultimately have the exit of this business be if I'm raising at this valuation right now? So there are a lot of things that kind of go into that math of figuring out, is this money helpful or not for where we are right now?
And we're still feeling that, right? We're still feeling the hangover of 2021. It's amazing. There's still down rounds. There's still zombie companies. It just hasn't been sorted out. It takes a long time to work its way through the system when you've raised so much money. So, I remember in 2022, everyone said, by the end of 22, we're going to see so many companies shut down. 2023, we heard the same thing. 2024. But honestly, 2025, like we're still seeing it. And maybe they're, more quiet sometimes, but there are a lot of growth stage companies that are in a tough spot and they need to make decisions. Like, do we keep on going? Do we shut down? Do we find another model? And so that hangover, keeps on giving.
In terms of what profile you are looking for entrepreneurs today, what's that look like? Has it shifted? How much you mentioned Cursor and kind of building out a proof of concept as whether you're technical or not, it's now an option. So what does the profile of a company look like for ideal investment to you?
Yeah, I think our profile has really stayed the same because quite honestly, when you invest at the pre-seed, really idea stage, the ideas really change. And so we're still looking for that entrepreneurial DNA. Like, do you have a vision of where the world is going? Do you have, resilience and grit to get there? Are you open to change and to data? So like the fundamental kind of tenets of what we invest in, I think have stayed the same, but maybe some of the questions we ask are different. So when we're investing in a company, even though we know things are going to change, we do like to look at the operating model, the financial model, and kind of see where the money is being spent. And I think it does raise some questions these days when people, at a pre-seed have a vision for 10 people on the engineering team. And so I think, we do ask questions of like, well, what are you able to leverage with AI and with, a lot of these, incredible tools? I think it's, definitely one of the questions and the queries that we have is, and how are you best using the tools out there? And I think that's just different, right? I think if you would have heard, 10 or 12 engineers, a couple of years ago, you'd be like, okay, well, maybe that is what they need. And now maybe you're a little skeptical about it. So I think, the basic tenets are the same, but maybe a little tweaks on the side.
Makes sense. Makes sense. I want to, you're more than just a VC. You're also an author. You're also a professor. I want to expand to kind of talk about some of the other things that you do. I'm sure there's many other hats that you wear as well. Entrepreneur. Yeah. So talk to me about, you are a adjunct professor. You're teaching young minds. What is the current mindset of these students that are going to be entering into the workforce soon? They're seeing all these changes with AI. Obviously, it's going to impact job markets and what they do. How is this kind of working through the system from students' perspective and what you're seeing?
Yeah, it's so interesting. I think, when I was running Techstars in New York, one of the things I loved about that was like I got to review thousands of applications every year. And some people thought that was daunting, but I mean, imagine the insights and the trends you get to see from, not just 10 applications, 100 applications, but literally thousands. I mean, you just see like repetition, you see patterns, you just see the future through, this kind of early look at what people are interested in. Teaching is quite similar. I have 400 something students this year at Cornell, and to see the world through their eyes of the problems that they want to solve is just fascinating, right? So they're on the ground and solving problems, sometimes for themselves or sometimes that they've experienced, growing up or in their families or whatnot. But you see it not just in ones and twos, you see it in the hundreds. And so I think one of the cool things about, teaching an entrepreneurship class is just the volume of what you see. In terms of kind of trends, it is really fun because, a few years ago, all the students were building, crypto companies, and now they're, everything is AI. And so, I think that they're excited more than worried about the future. I think that they're embracing these tools, and prototyping is changing so quickly. We have a session on prototyping. And, last year we invited the folks from Bubble who are like helping them get quick prototypes. Now we're like, okay, there's like even better tools that you can use. And, I just think that, it's very fun to see the rapid pace because it influences how we teach and the tools that, we encourage our students to use. So I think there's a lot of optimism. I think that they realize the job market is just different and that they need to distinguish themselves. And what's cool about having entrepreneurial DNA is that you can apply that whether you go work at Google or you start your own company. And so what we try to encourage them is that entrepreneurial mindset, can help you in all aspects of your work and life.
Do you think we're going to have a shift in the landscape of how many entrepreneurs there are? Because the barrier to entry is lower. You need less capital. You need a smaller engineering team. You could be less technical. So given that it's easier, do you think that means that more students or more just people in general are going to kind of try their hand at starting something and maybe raising a little bit of capital or bootstrapping? Or do you think it's still going to be kind of the same ratio of a certain percentage of the population want more certainty? They want kind of a more structured work environment, go work for someone, maybe they start something later, and it doesn't really change the ratio of entrepreneurship?
Every year I get asked this question, which is fun. And I think that, my answer is interesting, which is a lot of it depends not on the reality of cash available or tools available, It depends on the perception of entrepreneurship. When I started my company in 2007, people thought I was nuts. I was working at a big bank, had kind of a rising career there. And entrepreneurship, especially in New York City, was not something celebrated, right? And it was very hard to get people to take the leap. It was very hard to get my friends from Columbia to come join me, or from law school, because there was this almost negative perception of entrepreneurship. And so there just wasn't a lot. Fast forward, a number of years. And as we go through these cycles, these kind of boom cycles, and obviously 2020 and 2021 were just insane. But all of my students wanted to start companies after that, because the kind of zeitgeist of entrepreneurship got so interesting and sexy. And like, that's what actually drove it. I mean, sure, there was a lot of capital and they had a lot of opportunities, but I think it's how tech is perceived in the media and kind of in the common parlance. I mean, now if you go to Columbia, where I went to undergrad, if you start a company, that's like, well, that's pretty cool. I mean, I cannot tell you what people thought when I started a company. It was just looked so down upon. So I think that these kind of cultural trends go hand in hand on how many entrepreneurs we see. So my students in 2020 and 2021 were like leaving college. They weren't even graduating, or they were graduating, starting companies. They were so excited. And then like the tools maybe were okay, but it was just the capital drove it. Then in 2022, 23, they all went back to investment banking. I couldn't get anyone from my class to actually, they would take my class and then they'd say like, okay, maybe in a few years I'm going to go work at Goldman, and, that's fine too. I think, now what's happening is there's, the job market's a little bit harder. Cash is kind of harder. And I think it's actually good, because I think we're actually at the point where we're getting people that really want to be entrepreneurs, because, as I can tell you, it's a slog, right? I mean, it's really hard. And so I think that folks that are really passionate and feel it, an inner mission, to start something, are really coming to light. And that's exciting. So I do think the tools and the capital and whatnot, maybe drive some of the numbers. But I think it's the perception of entrepreneurship, which obviously goes in cycles, right? And I think that, in 2022, people wanted to distance themselves from entrepreneurship, and it was all a hoax. And I mean, so many people, my students were just like, well, that wasn't real. That was like the bubble of 2000, and then crypto and like all this stuff. And the perception got really negative, and less, and my students wanted to start companies. So that's my take.
In my circles, I'm an entrepreneur. I have a bunch of friends that are entrepreneurs. And obviously we talked about the bubble, and there's just so much capital, and interest rates are low, and it's a great time to start or go raise and stockpile, add cash to the war chest. But the stigma of kind of coming out of that, of it being fake or not real or bad. Yeah, that's very interesting. That's very interesting. I haven't heard that perspective, but it makes sense.
Oh, you can't really, you're just going to raise money from other people because you don't know how to make money. That's what, there was a lot of negativity around raising money and entrepreneurship. And I just saw it, kind of firsthand, because I just have like all these students, and I saw like what they were gravitating to and what they were dealing with. So it's been interesting. But just a lot of it has to do with, the media perception. I mean, I don't think that crypto has really changed. It's just that, no one wanted to be associated with it in 2023 and 2024, and now everyone, is back, right? So, a lot of these things are really perception.
So, Jenny, I also want to dive into maybe a little bit more of your life. I don't know if that's a fair assessment. I haven't read your book, but you just published your first book, so congratulations. What's that about? Why did you feel compelled to write a book, and what's in it?
Yeah, well, you'll learn a lot about me personally in the book. It's definitely a real personal take. But the book is really about global entrepreneurship, and what we can all learn from founders building companies around the world. I've spent the last, 15 years traveling around the world as an entrepreneur, living around the world as a founder, investing in companies globally through Everywhere Ventures. And I've just met, thousands of entrepreneurs, whether I interviewed them formally or just got to know them. I started to notice some common themes and threads amongst them in the way that they view the world and live their life. I've distilled that into what I call the everywhere mindset, which is kind of a curated list of some of these kind of principles that I noticed, throughout the founders that I've met with, over the years. And I, weaved it into my personal experiences. So the book is really kind of a fun, call it entrepreneurial journey around the world, meeting with founders, hearing about those ecosystems and how they've developed, and really being inspired through those stories. Everyone that I interview grew up far from the globe, Silicon Valley. And, somehow they've made it, and how they got there. Some of them grew up in small villages. Some of them grew up in war-torn countries. And so kind of shining light on their experiences was really important to me. I think, to our early conversation, we kind of hear from the same folks. We know a lot about Mark Zuckerberg and his origins. We know a lot about Bill Gates and Elon Musk, but we don't always hear about some of these other entrepreneurs who've just built, incredible companies. And so what it took to do that was really at the heart of this book. So yeah, that was why I wrote it. And it's been really fun to kind of get it out into the world.
There's certain kind of core ideas that come to mind, at least for me, and I think probably for others, around entrepreneurship, of grit, tenacity, kind of, self-belief, certain kinds of typical traits that you would use to describe an entrepreneur. But I'm curious, what are some of the less obvious principles that you've uncovered in all your interviews and globetrotting?
Yeah, so there's one that I talk about, which I saw in many founders and exhibits itself, and I call it this like kinetic energy. And it's this deep desire to explore the unknown. And so oftentimes these people present, they have a lot of enthusiasm and charisma, but what they really do is that they're high cadence thinkers who move quickly and act on data. And I think that that's something we see in a lot of successful entrepreneurs. They're really good at distilling patterns, making decisions. And, as I was getting to know these founders, I just noticed that like the speed of how they make decisions, whether it's to, move to another country or to launch in another country, is just, kind of incredible, and how they're just, voracious learners and just focus on the data, and they're able to, pivot and make decisions, really quickly. So that was one of the ones that I just found super prevalent, especially in these international entrepreneurs, again, who grew up all around the world.
Kind of that decisiveness and ability to make decisions quickly that are big and impactful, but do it with conviction. Is that accurate?
Yeah, and based on data, right? So, they're constantly learning. They're like sponges, and so you might talk to them one week and, they're going down one path, and, a month later, they're like, actually, we synthesized all the information. I spoke to 50 people, and it makes sense to go down this path. And to be able to do that is really hard, especially when you've brought everyone, in with your vision, whether it's your investors or your employees. And so to be able to act on, that data is pretty incredible.
It's got to be nice and fun to kind of have that global perspective, just to have conversations with people and then kind of pull out those threads, or what are those recurring themes from one person to the next, whether, they don't know each other, they all come from different backgrounds. Like you said, some people come from villages, some people come from other environments, but to see there are common threads, common traits between all of us it's got to be an interesting perspective to kind of see that and weave it together in a book.
Yeah. And I mean, another one of the principles I talk about is this idea of moxie. And I think in the US, we kind of talk about it as the founder that has the chip on their shoulder. But in many cultures, that's like really not accepted. So when you meet these founders that have been really against the grain, wherever they grew up, it kind of really like sticks out. Like, well, how were you able to do that, right? So I interview, this incredible founder in China, and she tells this story of building her company and just always, pushing, and people just culturally, it just like, people just couldn't like grasp her, but she just had this incredible moxie, and she just persevered. And it was really impressive and just inspiring to hear, her story, because yeah, maybe me as a New Yorker, like, I can have a little bit of swagger, but, some of these entrepreneurs culturally just like wasn't acceptable, but somehow they have this kind of inner desire and these inner traits. So celebrating some of those was really fun.
That's awesome. That's awesome. The last thing I want to touch on is you also are a big advocate within New York, and I think in the broader community, of bringing more women into venture capital, into this world. So talk a bit about maybe why are there so few women VCs? And then also, I know you have a networking group in New York. How are you kind of working to kind of change that?
Yeah, I mean, I think that a lot of it is from kind of history and networks and who people know. I have amazing male friends and colleagues, and most of the deals that they would maybe send with me and share with me are with male entrepreneurs. Now, is it because they're not looking, at women deals? Not at all. It's just that where are they getting their deal from? Their group of friends from college, or from banking, or right. And so if those are primarily men, so you have to just think of the cumulative effect. So I think a lot of it, there is obviously systemic biases, and you can talk about that. And then I think a lot of it is just the networks, that we build over time. And so I'm a big advocate of just diversifying your network. So for us, we have, a community of 500 founder and operator LPs, so the folks that give us money. We made a big effort to say, like, hey, we want to have that diverse, just across all different. We want international diversity. We want gender diversity. Like, we just want a really rich ecosystem, because those people are going to be helping us kind of source, diligence, and ultimately support our portfolio, right? So we need to have these kind of nodes in different communities and in different ecosystems. So I think a lot of the problem is that it's just easy to, we could have raised our money, mostly from kind of the usual suspects as well. So it was a little bit harder. Like, we had to go find some of these people. Maybe some of them were less comfortable with investing in venture capital. But instead of taking the easy path, kind of, my theory is that you have to really be planful and set out with the mission of what you want. And so we've tried to do that. So I run a fun angel group with a few other folks. It's very informal, and basically it started with this idea. There are a lot of kind of networking groups for women, whether it's entrepreneurs or investors. But what if we created a group that was very transactional? So once a month we meet, everyone brings a deal that they're either doing, they're interested in, and want some other feedback on. And we all share it with the idea of just getting more of us on, more cap tables, whether that's just kind of a hot deal that maybe we wouldn't have access to, or, bring more kind of female founders to the table. But it's been really fun. I think when we started it, pretty much every session, one person ended up, investing in this company,
Very
company.
cool.
And now it's like multiple people, per session. So it's been fun just to see the group kind of grow, which is fun. And
It also
we
sounds
don't
very
invest.
New York of like the New York way is, hey, show up, I got a deal, let's do business, let's
Yeah,
transact. It's like
totally,
no bullshit.
totally. And we're like on time. We start, we end. You have to bring a deal. Yeah. So it's very New York. We do meet in person. Now it's on Zoom, but then we meet in person a couple times a year. And like, I don't know, half of them, like, we don't even have like food. We're like, there's coffee, let's get going. So yeah, very,
All
very New York.
business. I wish I remembered where I was reading this, but I was reading something recently. I think it was particularly about venture. Maybe it was about private equity. But the number of deals, if you look historically at what gets invested in, you kind of think that as a collective, VCs will find the best deals and invest in the best deals, and there's kind of recurring themes and trends. But because of the innate biases, and I think it was specifically talking about gender biases, so many deals get passed over because they're just not, there's like a small little thing that they're not comfortable with because they're echoing kind of what they've done before, what's worked before. And, it's return capital, but that also is leaving a lot of returns on the table because they're investing what they're more comfortable in and what's familiar to them, rather than widening that deal box and saying, let's look at this from first principles. Is this a valuable company to invest in or not? Rather than, do I feel on a gut level that this is comfortable for me to invest in? So I think it's also interesting from a numbers perspective of, having diversity actually can improve your returns, and it probably does improve your returns. Obviously, you need a strong thesis and need to know what you're doing and investing in good companies. But opening up that deal box and investing more and having more diversity, which comes from a diverse network, can also improve your returns positively, empirically from the data perspective, as well as also helping build a more diverse company profile.
Yeah, I mean, we certainly believe in that. And, we've invested in many, many female founders and diverse people from around the world. But I don't think we kind of seek them out that way. We're just like looking for or we're, receiving inbound from like really interesting, big thinking founders. And like, we don't really care about their backgrounds. We think their backgrounds, are very helpful to, building those companies.
What's looking ahead? What's most exciting for you in 2025? We're kind of in this age of AI. It's technology. There's a new model dropping every week, and we're having changes in terms of the government and policy and crypto regulation. And there's so much change right now in technology. What are you looking forward to, maybe anxious about as the year unrolls?
Yeah, I mean, I think we kind of touched on it before. This is an incredible time to build a business because you do have a lot of tools to do that. And I hope that more and more, people can become entrepreneurs. I want to see as many people start companies, but maybe you don't have to quit your job to start it. And so what I'm excited about is new models where it's not so binary or there isn't one playbook. I bootstrapped not only my first company, but my fund. So Everywhere Ventures, I was working, at Techstars full time when I started this fund as in nights and weekends and ultimately, decided to go full time. So what I'm excited about is for entrepreneurship not to be this binary, scary, because I think that to your previous question, I think that limits, the deal flow and the networks and who can get in. If you have a family, if you have things that you need to take care of. And so what I'm excited about is you can in your spare time, use Cursor and code something up as a non-technical person who's supporting a family working, at another job. So the democratization of entrepreneurship, I think, is exciting, and hopefully the tools that are out there now just enable that.
I love it. Jenny, thanks so much for coming on the show. If people want to connect with you, where should they go?
My website, my book, LinkedIn. As you know, I'm a big LinkedIn poster. So pretty easy to find, and always excited to reach new audiences.
Thanks again.
Thanks.
If you enjoyed that episode, make sure you check out this video right here. And if you really enjoyed it and you listened to the end, take 2 seconds and share the love so someone else might find it by clicking the thumbs up button and subscribing. I appreciate you, and I hope you have a wonderful day. But click that button.